Hey, it's Friday, the 29th of March. Let's trade some Forex, huh? Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Thank you very much for being here. Thank you for subscribing to the Forex.Today YouTube channel. Thank you for the comments and the likes and the feedback and the loyalty and respect you show me every day. I really appreciate that. I want you to become a huge success being a foreign exchange trader. So we work every single day on your technical analysis, your fundamental analysis, your trade planning, and keeping your head screwed on straight. So thank you very much for that. If these webinars are helping you become a better trader, a successful trader, a happy trader, a confident trader, then please pay it back. Traders Way makes these webinars available to you every day, so pay it back by visiting tradersway.com, opening up a demo account or a live account. Once your account is open, if it's a demo, it takes 30 seconds. Once all that's taken care of, in the back office, you can download MT4. Come back to this video. In the description, you'll see there's a link that says, download my chart templates for free. And that includes my pivot points. That includes the moving averages setups. That includes, there's an EA in there for scalping. There's a bunch of different things in there, probably 100 charts. All for you for free. Thank you very much for being a client to Traders Way. Oh yeah, and if you're new to these webinars, please subscribe. Just click the little button. You'll be invited on Monday. Okay, let's go. This is going to be a short webinar today. So let's make it quick. Let's make it clean. Let's make it painless. Gotta get my drawing tool. No, I'm going to do that in the next couple hours. The exam. That's why I gotta roll, yo. Yeah, I did a sample practice test though, and they gave you the correlation, they gave you the standard deviation, and they gave you something else, and from that you had to figure out the covariance. So they did it sort of backwards, which means you had to actually do the formula and then bust out some algebra and solve for, the covariance of x, y. But anyway, so whatever. It's only math, as they say. So check this out. Monday morning, I had a long zip, 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 zip. Here we go, trying it again. So someone might be treating this as a double bottom. If you're a bull, that's good, except you're not expected very much this week. And the reason, or next week, the reason for that is, well, this week didn't do very much. So you're either a bull or a bear, or you're completely neutral and out, which doesn't seem that bad either. Going into the beast. Bit of a recovery in the last few minutes. Could be Brexit related. What do you think? Yeah, you're supposed to do it by hand though. Okay, so the thing is, do you remember talking yesterday about this exact scenario? Right? But some other charts in the gray area don't seem to get displayed. So I don't know, but you'll have to Google it or something. It works fine for me, but not fine for you. Don't know. Sorry. My guess is you're installing the pivot points on a non-Trader's Way account, which is a little bit shameful. But you might be jamming it onto no, but even that wouldn't matter. So no, I don't know what the issue is. I'm sorry, my friend. All right, going to Aussie. Okay. This drop down into the S1. Notice that this is a bearish exit. Bears did seem to exit. Okay. And once again, we're lacking trend. So we have a top here, we have a bottom here. This is an R1, which also is indicative of losing a trend. And then this is sort of, we're climbing from an S pivot to an M2 pivot, but not quite. And, you know, I don't know. It's a bit of a mess. It's a bit of a mess. Lots of day trades, but like, you got to be careful. For example, if all you look at was, this, you're going to find lots of little trades. The problem, okay, the problem is you're going to talk yourself into a short-term okay trade in a medium-term lousy market. Okay? So you got to be careful. You're going to talk yourself into not so good trades sometimes, if not a lot. So we go back to the beginning, right? So we had this earlier, and this is a beautiful M2 entry. This is an out position 4-hour type trade. And then it's not really respecting this pivot. It kind of, but you can see it's not a good entry here. It goes a little high here. And this is again what happens when you're not in a trend. Okay. Anyways, then you get a great M2, M4, or sorry, M3, M1 week or day. That's great. That's a perfect day. That was Wednesday, right? So here's Monday's entry was perfect. Wednesday's entry was perfect. Okay. And then what? And then yesterday's kind of an M2, kind of an S1, and then out of position, and now it goes a little bit, and we get kind of into that M4 area, and every day seems to be less good than the previous day, right? So, you know, so I don't know what you want to do with this, but I think the overall, the larger term charts or the longer term swings show you that you should expect less and less and less. Okay, and of course, if you're connecting this and you're connecting this, it's not really a flag, but what it tells you is it's probably going to get a little tighter before a break. Okay, and I still think it's going to break down in early April, maybe right after NFP or something. Well, Oscar says, hey, Wayne, hey, an agreement between the U.S. and China would make the pound rally? No. It wouldn't be bad for the pound, but it's not necessarily important for the pound. Now, you might be talking about pound dollar, and does that weaken the U.S. dollar? You didn't phrase the question that way, but let's say that that's what you're asking for. Well, positive global trade, especially with China, means Americans are going to buy more stuff from China, but also vice versa. But most likely the trade deficit's still going to be quite wide. So yeah, America will send a lot of money to China, right? And that increases the quantity of US dollars in the interbanking system. And therefore, yeah, the US dollar would likely weaken. But also the yen would likely weaken, and the Swiss franc would likely weaken. How does this affect the pound? It doesn't, except the pound, foreign exchange is relative. So if the pound did nothing but those other currencies weakened, then it would look like it would go up, but it's not actually going up. It's just relative to something that's falling. Okay? All you got to do is dance. So this was another one I went long on you know, I don't know, 5:01 p.m. on Sunday. Kind of went up. We knew this was the sell zone. We had that. We discussed it on Friday before that, and came back, tickled the support, and once again, kind of did neither. We did both. We did neither. So if you bought it down here because you're a bull, you made money. If you sold it here because you're a bear, you made money. And nothing, and no one's really happy. Okay? Remember, if you're in between, you're not making money. So you need to pick a team so you know when to enter and when not to enter. Okay? Remember, only you are making it confusing. Okay? Anyways, going back to here. Seems like that might be resistance, eh? Oh, for sure! Monday morning. Actually, Sunday afternoon for me. There's an M2 off of a central. And we had this marked somewhere. I don't remember how we had it marked. Maybe it's on a different chart. But we had this as support as well. The interesting thing is you could have gone long here with this target. It's reasonable enough support. And you only would have made money for a day and a half. Okay? And then as a bear, you're still looking at this as being ranged, right? And of course, we know that an R1 at the top of range can create some, you know, resistance, obviously. And then, boom. Reserve Bank of New Zealand considering interest rate cuts. That'll do it, eh? Oh, for sure. Okay. Man, I don't want to talk about standard deviations anymore. I'm so sick of it. Does anyone follow like a Z-score on their trading? That's another thing that we're doing is Z-scores, and I believe this the third half of the semester, which is just starting, we're going to do a lot of Z-score type comparisons. So, not too different from the pound yen as we just saw. What do we know? Talk to me, Basil. Seems rangy. Where the deer and the antelope lay. Yeah. So, do you want to get caught in the middle of this? No. Like maybe here. And then more like this. Okay. So A if you're a bear, B if you're a bear. If you're a bull, well, you got to wait for a dip, that kind of thing, right? A and then B is down here. Make sense? Smoking the crack? Slapping the bass? A z-score is the number of standard deviations of returns. Okay? So like the classic one that we did one in homework where there are two kids trying to get into college through their entrance exams. One takes the ACT, one takes the SAT. One scores a 900, and the other one scores a, what is it, like a 62 or something. Some like 900 or 62. Who did better? And you're like, well, that depends, doesn't it? Well, what does it depend on? How much they've deviated from the standard or the average or the mean, right? So you look at the average ACT score, and you look at the average SAT score, and then you do your basic calculations, and now you can say, well, one is, positive 0.23 standard deviations, and the other one is negative 0.1 standard deviations. So one did a little bit less than average, and the other one did a fair bit more than average. So obviously, even though they're completely different scores, turns out the one with the much lower score, the one with 62, did better than the student that got 900 because you're measuring two different tests, right? So anyways, it was just interesting. But don't get all, some of you guys are math guys, so don't get all wonky on me because I'm just a college kid. But it's awesome when you're doing this and it has to do with your profession. What a cool thing. Can you imagine if you went to college and what you're doing is actually relevant to your job? You're like, oh my God, how did this happen? Somebody screwed up at the university. This is actually applicable to the real world. Somebody needs to get fired, but of course everyone's tenured, so nobody can get fired. Unless you fat shame somebody, then you're fired fast, man. Fired fast. Oh yeah, comparative advantages and stuff. Yeah, that's. And the funny thing is, you can get, even though it's fairly straightforward, at least every once in a while my mind will get twisted and I'm like, how many bicycles for radios is that, or is it radios for bicycles? But yeah. Once again, I'm a trend trader, yo, right? And I look at this and I'm like, so what's the trend, buddy? So I kind of get antsy or nervous. So I don't know. Are we at the bottom of the range yet? Is it going to come down here a little bit and pick up that pivot? Don't know. But selling seems like less ideal than maybe sitting up and buying, right? Coding for MetaTrader? No. I'm learning R. And maybe in the next class I'll do Python or SAS, but we'll see. But no. Why would I learn programming when I can hire somebody for $5 an hour to do it for me? I can mow my own lawn, I can wash my own car. Program my own EAs. All right. These are EMAs. I don't have the link in front of me, but go to http://www.youtube.com/c/FX bootcamp, And there's a couple of playlists that go through all my chart setups and the logic behind like how to use the moving averages. Not like you just knowing what they are is sort of irrelevant. So it takes you through the setups and how to use each little piece and component, right? So it goes through moving averages, oscillators, I think some Fibonacci stuff. I'm not sure. It's been 10 years since I did the videos, but they're still there and they're all legit. Yeah. No, don't polish my own shoes. My son polishes his own combat boots. Anyways, if you remember our conversation yesterday, 1 standard deviation and 2 standard deviations is what we're measuring there. Right? So this is 95%. This is 68%. Okay, but check this out. If you don't have asymmetric information, then you're going to have to use Chebyshev's rule, which just says this is overstating and should only be 75. Boom. Boom. See? Who's ready? Like a boxer. Get me in the ring. I'm going to kill somebody. I don't care who. Get somebody. Put him in the ring. All right. No, you definitely can get someone between $5 and $20 an hour to program an EA for you. The other thing you have to consider is someone that does it all day, every day, knows what the hell they're doing, they can bang it out quickly. If I don't know what I'm doing, it's going to take me forever. So again, like, no, I do some things really, really good. I have a lot of friends that are very, very successful in the Silicon Valley. And of course, when they were kids in college, when I knew them, you know, they were learning how to program and run databases. And, you know, this is all at the very beginning of the tech world, so to speak, or internet world. And so they're all capable of doing it, and they don't do it anymore because you can always just hire somebody for less. So anyways, specialization is very important. I can come up with an idea for trading, and then I'll pay, you know, $50 and someone will program it for me. Instead of me wasting 2 days, someone could do it in 2 hours or 1 day, let's say. And it's always going to be more cost effective for me to come up with brilliant ideas than someone else to just code it. It's sort of like if Bill Gates is walking down the street and he sees a $100 bill lying on the ground, it would be a waste of his time to pick it up, because in the time he stopped where he was going to bend down and pick up the $100, he would have made like $1,000. So he actually wasted his time. He could have just kept going wherever he was going and made 10 million bucks. But, you know, it's funny, right? When those guys are that rich, stopping to pick up a $100 bill is a waste of time. Oh, I see what you mean, Jimbo. Yeah. Well, you know, it always comes down to what you need and how complicated it is, but yeah. Why do 90% of retail traders lose their money? They're lazy. They're not that smart. They don't do the work. They're looking for shortcuts. They want to get rich quick. Their mother doesn't dance very well. These are all probably true. Okay. I don't think I've met anyone successful in Forex that's lazy. So 90% of it is not sucking, and then the rest is just doing a really good job and really enjoying it, right? Warren Buffett. Yeah, I don't like Warren Buffett, so you gotta be careful. So yeah, there's tons of reasons, right? So this is why we talk about it every single day. Things like a sickening a ridiculous, sickening work ethic. That kind of stuff is not going to make you a success, but lack of a ridiculous, sickening work ethic is almost a for sure recipe for failure. Okay? So, like, if you show up and you don't have a ridiculous, sickening work ethic, yeah, it ain't going to happen. I'm pretty sure that's it. Right? That's it. If you don't have that, I don't think it's not going to happen. If you want easy money, I don't think this is a place for you. Go try brain surgery. Oh, wait, you can't be lazy for that either. Like, I don't know any lazy person that's successful. I know many, many, many extremely wealthy people, but I know actually like quite a few people that are just, you know, like average rich. They're not billionaires. Yeah, they got millions, but not billions, right? And they're hard workers, right? Right? I know guys that make millions and millions and millions and millions of dollars every month. And these guys are nuts at how hard they work. So for some guy to show up and he's like, yeah, I need to get rich quick and I'm lazy and I'm not that smart, you know, it ain't going to happen, son. I'm sorry. Go back to shining shoes. Right? Exactly. But also, like, the guy that mows my lawn, well, he has a team, he owns a whole company and stuff, but I was just speaking with him yesterday, and they're out there hustling, right? Like, dude, this planet is not made for lazy people. Or like the programmer I told you about, he contacted me on Monday, and he's like, I apologize, I've been away for a couple of weeks. I know you've been trying to reach me. I'm so sad. Turns out I've had a stroke. I've been in the hospital for a couple of weeks. The doctors are pretty sure I'll be able to speak again. But now that I'm back into the hospital, put me to work. I need to work. I need to earn money. My kids still need to go to school. I still have to pay medical bills. I got to work. Give me the work. Doesn't matter if my mouth doesn't move on one side. I need to work. That guy's a hustler. You know what I mean? That guy's a hustler. That's what you need. You need to be on it. Game on. Like, seriously, he had a stroke. He just got out of the hospital. He can't, one side of his whole body is numb. They're not even sure he'll be able to speak anymore, and he wants to get to work now. That guy could probably be a success in Forex. I don't know, but I know he's got the work ethic. You don't got the work ethic, and it ain't gonna happen. I've never met a successful lazy person in my entire life. New Jack, that's right, Cash. A mother hustler, yeah. But that's what it takes. That's what it takes, right? Well, everyone has a shot at it, but this is a career. This is a business. This is, I mean, it's not a get-rich-quick thing. It just isn't. It doesn't work that way. Nothing actually works that way. Somebody told me the other day, like, Lady Gaga accepted an award or something for her recent musical or something, and now she's like the only person in the history of America or whatever to win an award in every category of everything. Like, she's won everything you could ever win. But anyways, and she apparently grabbed the mic and said, look, I worked my ass off for this. You know, this kind of stuff, like, this ain't a dream. This isn't easy. This didn't fall out of the sky. I'm not naturally beautiful. I'm not naturally talented. I work my ass off, right? And I'm like, I need to see the video, but someone was just telling me about it. And I'm like, you know what? She's probably right. She earned it through the grind. And that's how you do it in Forex. Sit at your desk and work for, you know, I used to work like 3 days straight. Just 3 days straight, not sweating. I'd form so much sweat and grease all over my body. I'd have to go like rinse it all off. Like when, especially in the beginning, when you're not that good, you're not that experienced, you're not that smart as a Forex trader. You might be brilliant somewhere else, but you're an amateur in the beginning, right? Everyone's an amateur in the beginning. So what are you going to do? Go to amateur to pro? Day and night, night and day, weekends, holidays, just everything you got. Right? A grinder. You grind through it. I broke down everything you need to know about MACD, everything you need to know about stochastics, and I went through all of this on everything, on every indicator, of every chart, of anything. I ground it all down to find minutia. Everything of everything, but I did it one time. One thing at a time. I mastered everything, but at one at a time. And that is true. Yes, I did wear the skin off my tailbone from sitting so long. So do I do that now? No. Okay? So maybe it's easier for me now. Okay, yeah, well, I put in the time. Right? Put in the time. Like Lady Gaga. She put in the time, she earned it. Might look easy. It only looks easy because she tried so hard for so long. She's got it down. She's got it, right? She's got it. And then what did Dr. Dre say? Just give me one more platinum plaque, then fuck rap, you can have it back. Right? So, like, now you got it. Boom. It's easy. Retire, drop the mic. Boom. Right? But the thing is, it's retiring from the abyss of it, or the fear, the scariness of it. Because I still remember how, you know, even when you're successful, you can lay in bed at night thinking it's all going to go away, it's all going to go away, it's all going to go away, right? You know what I mean? Because maybe you got lucky, or maybe it's the market, or something, and you're not quite sure. You're mostly confident, but not 100% confident. And after a while, that sort of that fades, and pretty soon, like, you're looking forward to things coming up. You're looking for the change. You're looking for this, and you're thinking about that. You know, like the other day, I was telling you I'm shaving, and I'm talking to my wife. I'm like, yeah, I think we should buy back into the stock market around, you know, August. Yeah, you know, so I'm already planning out August. Yeah, Das Capital. No, the thing about Das Capital, and also about Wealth of Nations, they're actually beautifully written books. I don't know if you guys actually read this stuff. I don't know if you have read Ricardo, Machiavelli, who else is another good one? John Locke. I don't know if you've read any of these things in our economic history, at least the Western world economic history. You know, it's beautifully written. Most of it is beautifully written. Anyways, let's do gold. Okay, now what? This is a bear exit. This is a bear exit. So what do you think? Should you sell? I'm thinking if you're a bull, that'd be more interesting. If you're a bear, you're going to sell high. But the problem with selling high is maybe you can catch this blue area, but it's mediocre because it's not trending. See, at least a move up, at least we can say, aha, double bottom, right? What do you do here if it's like this? Lower, high, higher, low, and all of a sudden it means more consolidation. So, yeah, right on. Good luck to you, Joe. You know, I had a similar but different problem, same but different. I loved my job and I quit it. Okay. Remember, I'm thinking about being a Forex trader. So here's how it went. I'm like, I've been studying it for a couple of years now, And a couple of things happened where I realized I was being mediocre at my job, and I don't like being mediocre at anything because I was so focused on Forex. So I'm getting ready, like I'm seriously now considering thinking, and I remember I'm crunching the numbers and all this kind of stuff, like, well, I'm giving up health benefits, I'm giving up a guaranteed salary, so I'm going to need to make more than those things combined because I'm going to have to buy my own health insurance, and there are going to be months that I don't make money or even lose money, so I need to make a lot more money as a Forex trader than as a venture capitalist. So I'm doing all these calculations, and I'm really trying to justify to one or the other, pick Forex and quit the job, or quit Forex and go back to my job, but I like being awesome at something. So I'm doing all these calculations, and I'm doing it over the course of a couple of weeks. I'm really kind of going through the process mentally and emotionally to make a decision. And then they walk in, the boss walks in, actually the owner of the company walks in, he's like, "Hey, Wayne, I want you to do a project for me." I'm like, "Really? That's cool. What do you got?" "I want you to be the vice president of legal services." "I'm going to give you a bigger office. I'm going to give you an increase in your salary. I'm going to give you full responsibility. You're going to report to me and the other, this other guy that I was already reporting to." But anyway, so but it was like me and the founder and owner of the company working on a pet project. Boom! Holy snap! Changed the variables, right? So I accepted the job, and it was about 3-4 weeks into it, and I'm like, "But I miss Forex. I miss Forex. I miss it. I miss it. I miss it." So, Joe, I had to walk in to the founder of the company, thank him for the opportunity, thank him for the promotion, thank him for the trust and the respect. I quit. Now, let me tell you, that's a difficult thing to do. That's a really difficult thing to do as well. Jumping from a job you hate, I hope you find something better. I hope you find something that pays you the bills and keeps you alive. And I hope you can stay humble, if you will, monetarily, or at least stay alive. I don't know if you have wife and kids and all that. If you don't have a wife and kids, then you can certainly make sacrifices. But if you have a wife and kids, it's much more difficult. So, but anyways, I hope you can survive the next, let's say, 3 or 4 or 5 years, being as small as possible, growing that trading account as big as possible before you need to even touch your Forex money. But at some point, it needs to be Forex money. The worst part is when you run into a problem and you're like, uh-oh, I need to touch my Forex money. Don't do it. Don't touch your Forex money. Oh my God, a medical problem came up and we're going to need some money. Don't touch the Forex stuff. I'm telling you, don't touch the Forex stuff. It's the future. You kill the future and then, right? It's going to be very tempting. It's going to be very difficult. But I know a few people that have gone through a process where they quit their regular job and they want to focus full-time on being a full-time currency trader. And one guy, he moved from the United States to a small town in Brazil. Now, he must have spoken Portuguese. I don't remember that part. Maybe he liked Brazilian women. But anyways, he moved to a tiny town in the jungles of Brazil. And he was still logging in the webinar. And I'm like, yeah, well, how'd you pick that place, right? And he's like, it's cheap. He's like, I live on like $300 a month. Yeah. No house, no credit, no wife or kids, still 25. Yeah, good. Find a safe neighborhood with a tiny, tiny, tiny apartment. You need a bed, a desk, a computer, you need internet access. Yeah, my early days when I was in my 20s, I worked like ridiculous, sickening amounts. And I don't regret any of it, and it was really good. And this is way before Forex, but worked my way up from my first office was 7 feet by 7 feet, so 2 meters by 2 meters, no windows. My second office was 2 rooms, and I hired an employee. So 2 rooms, brick walls, windows, overseeing downtown San Francisco, beautiful, gorgeous elevator outside. Then the next office was 5,000? 10,000? 5,000 square feet. I had a break room. We had our own private bathrooms and showers, meeting rooms, and it just got bigger and bigger and bigger. And it all started with just me in a tiny thing about the size of a phone booth, working my ass off day and night, day and night, day and night. I'd walk home because the subway would close at 1 in the morning on a Tuesday, and I would walk home. That kind of stuff. So if you got that freedom, save every penny you possibly can and work, and make sure you take the time to love what you do. Don't work yourself into the point where you resent trading. So I do lots of things like, and I tell you this but I do it all the time. I'll sit outside, the sun is shining, I'm actually looking at beautiful flowers, I'm looking at a lake, so I put myself in a nice area, and then I'll sit outside and I'll either do work, or I'll read newspapers, or I'll meditate and I'll think about things, and I'll smoke a cigar or have a nice coffee. Maybe in the evening I'll have a glass of wine or a scotch or something, but I'm doing work. And what I'm doing is I'm rewarding myself sort of chemically, if you will, emotionally, if you will, not just intellectually. And I'm saying, look, I'm enjoying what I'm doing, and I'm doing Forex. I'm reading central bank reports. I'm reading whatever, I'm doing the analysis. I'm going over my charts. I'm enjoying being a currency trader. And I think it's important that you make that like a very focused, explicit process where you train yourself to enjoy the work, because you can work so hard where you become resentful. You need to stay emotionally involved and emotionally passionate, right? So take those breaks. Take those breaks and reward yourself for doing the work. I don't mean sitting in front of the chart pulling the trigger. That is stimulating. That's crack. That's injecting adrenaline directly, or dopamine, okay? When you're trading, it's dopamine. That's not work. That's easy. If you don't know what you're going to do tomorrow, you've already lost, okay? So that's what I mean by the work. Doing your fundamental analysis, maybe doing your longer-term charts, reading policy changes, just being in the game, just being a professional, right? I had one guy one time watch CNBC and Bloomberg for 10 hours a day for 2 weeks straight, just taking notes. And I told him they're just going to talk about random things, but you'll see over the larger period, you'll see about the types of things you'll uncover very obvious common themes about what they're talking about over the 2 weeks, because they keep bringing in experts to talk about certain things. And meanwhile, you should be taking notes. What do you understand? What do you don't understand? Why do they keep talking about a yield curve? Why do they keep talking about an inverted yield curve? Why do they keep talking about the Fed maybe cutting? What is the dot plot? What do they mean the dot plot might change at the next meeting? Write all that down and then follow it up with research. And I said, after 2 weeks of you not trading and just watching and taking notes and learning, you become part of the industry now. And you hear the lingo, and you hear the focus, and you hear about these guys that make $5 million a year salary and they only make 1 trade a year, right? I always think it's great, like a portfolio manager, he has 20 stocks in his portfolio, and they rotate 1 out every year. 1 every year. So they're crunching the numbers, trying to figure out what they're going to do next year. And they're like, yeah, I think we should sell some Apple and buy some Nvidia. 2019, done. And the guy makes $5 million a year. right? So anyways, train yourself to love what you do. Make sure, because here's the thing, if you're living in a small town in Brazil, sleeping on a mattress and working on a laptop for 20 hours a day, you forget that there is a whole entire industry. There's a whole entire world. There's an office building in Shanghai of people focused on what you're doing, and you feel like you're the only person in the world doing this, right? There's tens, so you need to make sure you feel connected with the guy in Shanghai or Kuala Lumpur that's trading against your current position right now. You're a long pound, they're short pound, or whatever, and you got to stay connected and stay focused, and right? And be a pro. You know what I mean? And Sao Paulo, for sure. Okay. All right, guys. I got to go. Thank you very much for being on my team. I appreciate you. Have a wonderful weekend. Hey, Swing Trading Group, we're going to meet at 9:30. So I'm going to spend an hour studying. And then I'll see you guys at 9:30 for the Swing Trading Group. And everyone else, I'll see you on Monday. If you want to join the Swing Trading Group, you simply go to fxbootcamp.com, pay money. There's a thing that says day trading, swing trading with performance coaching. It's really interesting. You put money in, you get lots of education, you get some hand-holding coaching, and you join my live Swing Trading Group. Pretty nice, right? So do that right now, and I'll see you, everyone in the Swing Trading Group in about just over an hour. So peace on earth. May the pips be with you. May your profits be above average. See you later, Gator. Cheers.